April 29th, 2022 bulletin. We're risk off at the big picture. However, the movement was quite subtle. It was just like a tiny change. However, it does tell us that the retail guys are net positive on risk, so we have to be a little bit careful. VIX is below 30, so that might be a good sign. However, do note that the retail guys are buying dips, and that's usually unhealthy. And so just bear that in mind. We still need that VIX to go below 26.5. It's your yearly pivot, so it's taken the low of the year to the high of the year, and it's the midpoint of that yearly range. And so we're above that range at 29.99. I think we might see a crush from the VIX, but you know, we'll have to wait and see. Dollar is giving back some ground. We had an amazing week on the dollar, so I'd imagine a little bit of profit taking would take place, and it's the end of month as well, don't forget. Kiwi is currently strongest on the small time frames, and Aussie is strongest on the H1 time frame. But you know, we have to remember the big picture. The dollar is really mega strong on weekly and monthly. I think it's a bit of profit taking maybe. And what happens with risk if the dollar sells off? It should go up. So I'm wondering about this VIX. So keep an eye on the Dixie, I think. And today's video, not this video, but the one after this, is going to cover yen crosses, because it looks like the average line is moving now, and it's telling us that the retail guys are giving up on the yen crosses. So that's interesting, and you will see a direct consequence of that yen bubble. When they give up and they get stopped out, we're going to see that yen bubble come down. And it'll just be unbelievably cruel and horrible for those retail traders. S&P was a buy here, and it looked like it was going to make a sell. Nope. The selling on the wick encouraged them to short, and again that wick encouraged them to short. So it's almost like price got pushed down in order to, you know, to sway the sentiment. So whether or not it's going to happen again, we're going to see a wick down, just to make these guys so they don't go long, because if they go long, it's going to skew things. We don't want the retail guys to be buying dips. They've got to be conditioned to be fearful, and if they're fearful, we'll come up, because that's where their stops are. They're going to have their stops up here, and I think this might be a bear trap here. If you remember yesterday's video, I reckon they've got quite a lot of people down here who are thinking that we're going to really, you know, the end of the world scenario. And they could be traps. If they are, they're already in quite a bit of drawdown. So get a copy of this trading station. It's absolutely amazing, and it's free. So you know, you have to get it. I don't know why you wouldn't get it. It's just absolutely, you know, it's powerful. So there's the gold buy, for example. That's from yesterday's bulletin. So there's, yeah. So that was a good one. That was 1880, and I'll be calm. It didn't even really come down so much. Like we had that pretty heavy candle here. But you know, we carried on, and so it was a great signal using this trading station alone. That would have netted you sufficient profits on that move, even on a small lot size. So that's that. So that's the buy. Hopefully you understand why it's a buy, because it's the SSI crossing the 21 moving average. So that, you know, that's the indication to go long. Oil is the greatest buy, and Kiwi is just about the greatest sell, but you see the colour is quite, it's like got a light hue. It isn't not dark, so it's not really that great a buy, but not that great a sell. Sorry, because it's not that dark colour. Dollar CAD is a strong buy. Oil is as well. Euro pound too. But however, if the dollar does like give back some great gains, then this might not do so well potentially, and you've got the strong oil as well on the CAD. So the shifting was very subtle. So you want red and reds to match, and green and greens to match, and so that's that. Yeah, the 5 and the 10 have inverted. That's higher than this one, and so that's not so much of a good sign for risk. It had stabilized, and then the Apple and Amazon earnings came out, and it put that, you know, put that on the back foot. And ideally we want this lower, that one, to really remain where it is potentially, but they can't really be inverted. It's not a healthy sign of the economy. And we had the US GDP miss yesterday, and it showed that the economy contracted and it's shrinking. when you've got rising inflation and a contracting economy, it's quite bearish. So this would have been probably caused by the GDP and maybe that tech earnings. So it wasn't so much for a good day yesterday, and the reason why we went up is possibly because sentiment, not necessarily fundamentals. So the bubbles are gold. There's Dubai, which coincides with this. You know, they shorted it, so we saw that consequence on the bubble. Euro is weakest. Yen is coming down, and if it comes down even more, it just tells us that they're reversing. Probably not on purpose, but from getting stopped out, and that's just the consequence of stop hunts. If that comes down, it's likely they're just giving up, and or they're going long on XXX yen. So if they are, this will come down. So my second video will cover the stop loss clusters for cross dollar and cross yen. SLC update, largest move was gold, which we covered. Largest stop loss clusters, Euro USD above, still at that location, 109.50, the size is 4.14. That's old now, that stop loss cluster. They've held on, so whether or not it's going to come up to take their stops, I'm not sure. CAD is strongest and Euro is weakest in the weekly view. That is so extreme now, the CAD, that can probably come off. I think we're too extreme. It's like punishment. This is the reversal pain zone, and this is the reversal pain zone. So I don't know how long this will last. I'll have to wait and see. So CAD could reverse potentially. And calendar. I've got quite a lot of stuff on the calendar, as you can see. Just be careful. Disinflation rate in 3 hours time, so that's going to be a big mover. And we've got the consumer sentiment as well in 8 hours time. But just so you know, I won't be trading today because my plan is to take Fridays off, because that's as part of my plan. And the theory is that I make enough money Monday to Thursday, so I don't have to trade Friday. So that's going to be my plan today, and it probably will be going forward as well, because Fridays can be a bit of a casino. However, last Friday the signals were excellent, so it might not be casino time for the retail guys, but we'll have to wait and see. Yesterday we had an 18 pip loss on pound yen, which is fine. It coincided quite late in the day at 6:30 UK time, and it was going towards the Apple and Amazon earnings, so I'm kind of glad it closed due to the volatility. Amazon fell 10% after hours, and so that would have had a knock on with risk. And lastly, this wraps up a hugely successful week for signals. The total will go out on Monday's bulletin for this week, because obviously we're still capturing signals today, being Friday. Really happy with the results. They seem to not be only accurate but responsive in price action. And so that's that. So I'll wrap up now. I'm going to cover the yen and dollar on the second video. So we'll have to wait and see how we do today, and probably going to be a fantastic day. If it is, that'll be awesome, because last Friday that was pretty amazing. So I have to wait and see what happens with today. Currently we've got a gold buy, but we don't log that on the spreadsheet because of its pips count. So have a good one, and I'll speak to you soon. And if you can tune into the technical video, that'd be good. Any likes and subscribes would be cool, and I'll speak to you soon.